It's a continuous of this session. Last session we learned about the workings need to be done. Today we will be learning about how 9 and 9C to be filled.
Yes. Thank you, ma'am. Yeah, hope my screen is visible to you all.
Yeah, it's visible.
Yeah. So, good afternoon, all. The flow of today's session will be first, I will discuss about the clause by clause analysis of GSTR-9 and 9C. In this, we will discuss about what are the contents and how to report in the GSTR-9 and 9C. We'll see. And after that, before filing GSTR-9 and 9C, what are the validation checks we need to ensure, that also we will see. And at the end, we will see the addressing discrepancies and proper reporting, how to report the data correctly in the annual return. That we'll see. At the end, if the time permits, we'll take the question and answers. So now coming to the applicability of GSTR-9, hope most of the participants now has participated in our last session also. But for the new members, for the benefit of the majority who have not participated in the last session, so we'll see the applicability of the annual return. So every registered person under GST is required to file the annual return as per section 44. So there are some exceptions. I am not going into all the thing. And before moving on to the contents of the GSTR-9, we'll see the context of the annual return, that is GSTR-9 versus 9C. If GSTR-9C talks about what it should be done, whereas coming to the GSTR-9, what you have already done. That means GSTR-9 is a statement of fact, whereas GSTR-9C is what the thing you should done now. So for an example, if you see the turnover, GSTR-9 will capture the turnover on which you have paid the taxes, whereas 9C, you have to ascertain the turnover on which you have to pay the tax. Similarly, with the exemption also in the GSTR-9, you have it will capture the exemption what you have declared in your monthly return, that is 1 or 3B. Whereas in the 9C, you have to ascertain the exemption as per the law, whether it is allowed or not. Similarly, with the input tax credit and rates of taxes you have adopted in the 9C, whereas the rate of tax as per the act, you have to ascertain and cross-check the HSNs also. So this is the context of this 9C. Now we'll see let us see the contents of the GSTR-9. GSTR-9 is very beautifully drafted form. It is divided into total 6 parts. Part 1 to part 6. Part 1 deals about the basic information we need to give it in the part 1. That is about the GSTN number and the legal name, trade name, all that info we need to give it in that part 1. We're coming to the part 2. Part 2 deals with the liability. In part coming to the part 3. Sorry, coming in the part 2, liability again divided into 2 tables, table 4 and a table 5. So we'll discuss about these tables in detail in the later slide. First, we'll understand how the form is divided into the different parts. So in the part 2 liability and part 3 is about the input tax credit. Obviously, next to the liability and the input tax credit, it's a tax paid details that is under table 9. And coming to the part 5, adjustments. So what this is the most important table. So if you see here, if we have reported any turnover pertaining to the previous year, that is 23-24, you reported it in the current period, that is from the April 2024 to the November 2024. So if you have reported previous year turnover in the current year 3B, that is up to the November, you need to report it in the part 5. That is turnover comes in the table 10 and 11, whereas ITC, if we have availed any ITC pertaining to 23-24 in the current period, that is up to 30th November, or you have reversed any ITC in the current period through 3B, you need to report it in the table 13 and 14. Table 14 for the availment and table 13 is for the reversal. Similarly, case with the turnover. Table 10 is for the liability discharge, and level if you have write any credit notes in the subsequent period. Coming to the part 6 is an other additional information that you would need to report the government. In this, you need to report the HSN outward, inward, and the refund detail. If you have claimed any refund, those details you need to report it in the table 15 to table 19. It's an additional information that you need to give in the part 6. So part 2 to part 5 is important tables, whereas part 6 in the HSN outward is important. Other than that, remaining all are optional tables. Coming to the contents of the GSTR-9C, it is again further divided into the 5 parts. Part 1, basic information, and part 2, we need to give the turnover details, whereas in the part 3, tax payable and tax paid. Part 4 is input tax credit. If there is any additional liability, that we need to declare it in the part 5. Don't be confused by seeing all these tables. Going forward, you will understand all these where to report and how to report in each of the tables in the later slide. You will get a good idea. So, source of information. What is the information required to file a GSTR-9? Primary information is your 12 months 3B, 12 months GSTR-1, and your audited books of accounts, and your 2B, GSTR-2B. So all these are the primary information. Along with this, you also need to have a GSTR-3B of the next year. That is current period. That is from the April 24 to the 30th November 24. Whatever the returns you have filed between April 24 to the November 30th November 24, all that you need to have. Why the subsequent period returns are required? You might have report the previous year turnover in the current period. That is 23-24 turnover. If you have report it in the 23-24. So for that reason, you have to carry these returns also. Similarly, the GSTR-9 or the previous year, that is the 22-23 annual return. For what you may have carry forward some items in your previous return. For that reason, you have to have this GSTR-9 of the previous year also. And DRC-03 tax payment. If you have paid any liabilities, or if you have reversed any input tax credit through DRC-03, and that also you need to have. And if you have received any notices or orders from the department and refunds claimed, all these need to report it in the other information, that is from the table 15 to table 19 in your GSTR-9. So these are all the information we have to be kept ready before starting preparation of working for the annual return, GSTR-9 and 9C. So going on to the next slide. So turnover reporting. We'll see how to report the turnover. So obviously, GSTR-9C is a reconciliation statement. That is reconciliation of your books turnover versus your GST turnover. Obviously, your books turnover and your GST turnover and your income tax turnover as per your income tax will not match, because GST will be driven by time of supply provisions, whereas your financial statements will be prepared based on your applicable accounting standards and applicable GAAP, generally accepted accounting principles. So because of the various reason, your books turnover and your GST turnover will never match. Very in rare cases, for some taxpayers it will match. So what we have to do, you have to arrive the turnover as per GST by making the adjustments. Let's say as per books of account, you will recognize the unbilled revenue. But whereas under GST, you need to pay the tax based upon your time of supply. Similarly, case with the advances. If you have received any advance for the services, you need to pay the GST tax liability as and when you receive the advance. But whereas in the books of accounts, you will recognize that as a current liability. As long you will recognize that as your revenue only after raising an invoice. So because of all these reasons, your book turnover will not match with your GST turnover. For that reason, we have to ascertain the turnover as per GST. You have to ascertain turnover as per GST by making all these adjustments. If you see the table 5 of GSTR-9C, you can see the um, standard reasons for not matching your book turnover with the GSTR-9. If you see the 5B, unbilled revenue at the beginning of the financial year, if you add that unbilled revenue to your book turnover and like that, and reducing the unadjusted. Similarly, if you see the unbilled revenue at the end of the financial year, if you reduce that, and the turnover will get matched with your GST turnover. So all these adjustments you should be done, and by making all these adjustments, you will arrive the turnover as per GST. So from the book turnover, you have arrived the turnover as per GST. Further, the turnover as per GST, how you have arrived in the GSTR-9C, you further bifurcate it into the two buckets. That is, transaction having tax implication and transaction not having tax implication. That is simply, I can say, the taxable turnover and the turnover which is not subject to the GST. So taxable turnover, I need to report it in the table 4, and the non-taxable turnover, I need to report it in the table 5. We'll see detail about what we need to report in table 4 and table 5 in the next slide. So table 4 is taxable and table 5 is non-taxable. For the time being, you understand that's taxable and non-taxable. So if you see the table 4, in the table 4, we need to provide the information. We need to bifurcate the taxable turnover based on the type of the tax. In the table 4A, you need to declare the B2C supplies, whereas in the table 4B, B2B supplies, table 4C, exports with payment of tax, SEZ supplies with payment of tax, and deemed exports. If you see all these supplies are subject to the GST. So you can how we can pick all these figures. You can pick all these figures from your GSTR-1. This how you are declaring the supplies in your GSTR-1 the same like on consolidated basis on year wise. You need to report it in the table 4. So coming to the table 5, if there is any unadjusted advances, if you have received advance against the services, still if you have not raised any invoice for that advance, that you need to report it in the table 4F. And in the table 4G, inward supply subject to the reversal. If you have received any inward supplies which is subject to the reversal, that you need to report it in the table 4G. Table 4G1 recently added from this year only, that is from the 23-24. In this table 4G1, 4G1 is applicable for the e-commerce operator who supplies goods or services on which tax payable under section 9, subsection 5. Let's say this 4G1 is applicable for the e-commerce operator like Swiggy, Zomato, Ola, Uber, because they will pay tax on behalf of customer who is supplying goods through him. So 4G1 is not applicable for the regular taxpayers. It is applicable for the e-commerce operator. So he need to declare the supplies, whatever the supplies he is supplying on behalf of the vendors like restaurants or cab drivers. On behalf of all these, if he supplied any outward supplies on which he is required to pay tax under section 9 subsection 5, then in that case he need to report it in the table 4G1. Otherwise, for the normal taxpayers, 4G1 is not applicable. In the 4G, only the inward supplies on which he needs to pay the tax under reversal, only those supplies we need to report it in the table 4G. Now coming to the 4I to 4L, whatever the adjustments we have done by way of credit note or by way of amendments, upward or downward amendments from 4B to 4E, that is from the we need to report it in the table 4I to 4L. Whereas if you have issued any credit note or make amendment related to the B2C, you no need to report it in the table 4I to 4L. Any adjustment is there, you directly make the adjustments in the 4A itself. Let's say if we have write the credit note of out of 100, you have read the credit note of 20 rupees for the B2C supply. In that case, you no need to report it in the table 4I. You directly make the directly put the 80 rupees figure in the B2C. That is in the table 4A. Only for the if we have made the changes from B to sorry 4B to 4E, in that only for that supplies you need to report it in the 4I to 4L, not for the B2C. So this is all about the taxable supply. This is how we'll report the taxable supplies. And now coming to the part 2 and the table 5. Before discussing this, we'll see the table 5. In the table 5 also, new table has been inserted. That is the table 5C1. This is in the table 5C1, we need to report the supplies, what we have made the supplies through the e-commerce operator, on which e-commerce operator will pay the tax. On the supplies, we will not pay the tax. E-commerce operator will pay the tax on behalf of us. So for us, these supplies are non-taxable supplies. That is, so that's the reason we need to report it in the table 5. What we discussed initially, that in the table 5, what are all the supplies which are not subject to GST that we need to disclose in the table 5. So if you see the table 5, zero rated supplies without payment of tax, that is whether export without payment of tax or SEZ supplies without payment of tax, or supplies on which tax to be paid on reversal basis by the recipient, or nil rate, non-GST supplies. All these supplies we need to report it in the table 5. So table 4 is all about the taxable supplies, whereas table 5 all about the supplies which are not subject to tax. If you see the table 5N, table 5N is my comparable turnover with my books of accounts. We'll see how it is. Taxable turnover, here my turnover is 4N minus 4G minus 4G1. That is my output taxable supplies minus supplies on which tax is payable under reversal. Actually, this 4G1 and 4G is not my turnover. I am paying tax under reversal on supplies made by my supplier. These are all the inward supplies. For that reason, I am reducing my inward supplies from my total taxable supplies. So 4N and 5M is the exempted total. If you see the 5M, the total turnover on which tax is not to be paid, 5M. So my total turnover, that is taxable turnover 4N minus 4G minus 4G1 plus 5M is my total turnover. So this is the comparable figure with the turnover what I have arrived in the GSTR-9C. If there is any difference between this turnover, then I need to see what I have to do. So we'll see, now we'll see the adjustment. So what's my book turnover? Based on book turnover, how I have to report it in the GSTR-9 and 9C, we'll see. So what of the tax I have paid in 3B up to the March 2024? So that I need to report it in the table 4. And if I paid my liability through GSTR 3B, but in the subsequent year, that is from the April 24 to November 24, if I paid any liability in the subsequent year, then I need to report it in the table 10 and table 11. If it is an upward, then I need to report it in the table 10. If it is a downward, I need to report it in the table 11. Still, after November, let's say after November, I am in the December. We are in the December now. If I have ascertained any tax liability, but the tax liability I have not discharged in the previous year or in the current year 3B. So what I have to do? I need to discharge that liability through DRC 03. In that case, where I have to report this turnover. Now I am paying liability on that. Now at the time of preparation of working for the GSTR-9 and 9C, I have identified this liability. So now I am paying through DRC 03. In that case, if you are discharging liability through DRC 03, you need to report that in the table 4. So in the table 4, whatever the liability you are discharging through 3B plus and the liability you have discharged through DRC 03, should be reported in the table 4. So subsequent period adjustments in the obviously in the table 10 and table 11. Now coming to the reconciliation of books turnover. Yes.
Before you move ahead with all the adjustment and all, with respect to turnover, can you come down to 9C template, table 5?
This one only?
9C table 3. So if you will see the way first dealing for the form with respect to only outward part. Now the first thing is government itself recognize the fact that there is what has been reported in audited financial statement is what it is income as per books of account. But when it comes to GST, it is what is liable to tax is a supply. Second part, that there is a timing difference. The valuation mechanism, the way which work under GST may not be similar under the books, the way we record under the books of accounts. Then there is a concept of deemed supply, means even where you have not received a consideration, then also it is recognized as a supply, which is dealt by Schedule 1. So if you see these points, as the government know, the way they have first designed the 9C for outward is to first arrive at the GST turnover from audited financial statement. And that is the why there are separate adjustment has been prescribed which need to done. So while checking, you have to make sure you check all these points. So if it is a service industry, then only unbilled revenue will come and advances adjustment will come. Because for goods, advances is not liable to tax as they have given specifically exemption. Now the column which you are seeing from B to N, these are all optional field. It's upon you whether to fill it or not. You can directly fill all the details which you are making an adjustment with audited financial statement to arrive at GST turnover at 5.4. However, I have even in our previous session, we have discussed that it's better to report separately because 5 of figure being a huge amount, either negative or positive. See, if you are adding department is less worried, but if it is getting negative, then they are like, why this amount has been reduced. So the way they have designed, if you will see, first they are asking us to identify the difference between your books income and your GST turnover. And when we move to GSTR-9 table 4 and 5, you will see the GST turnover which we have derived. They are dividing into further into various type of supply document types, which is what has been taken us by Jagadeesh table 4 and table 5, which is divided into tax implication where means we are paying the tax and table 5 where we are saying we are not liable to pay the tax. Though in our previous session, we have discussed in details what are the documents to be checked and how the reconciliation to be done. Today, focus in how the filings to be done. So, if 9C is applicable to you, then you have to make sure you see what are the reasons coming from audited financial to GST turnover, the reason for differences. And those reasons should be in the respective table or row should be reported. Like if it's a service, you should check is there a UBR or unadjusted advances. You make sure you do that reporting. Now, second part which you can say that there can be a case even though advances are there, but client might not have paid the tax. They might not be paying tax based on receipt of money. They are paying tax when the invoice is raised. What you can do? Even in those cases, it is advisable you report opening, closing advance, take the impact. Reason being, even though you have not reported in your GSTR-1 relating to advances, but at the end you have paid taxes on the same. When the invoice was raised, it was paid on 100 rupees. It was not paid less than it. So that checking need to be done. Now another part is credit note. While doing reconciliation, you should take special care to credit note because credit note under GST has its own separate definition, and the benefit is allowed only when that is satisfied. So in case if you are getting that there are credit notes which has not been reported in R1 or 3B, then you can't take benefit by doing reconciliation over here. So there can be a reason, and those credit note you might have to report as a financial credit note in your GSTR-9. If you will see that 5J credit note accounted for in audited financial statement is the specific row item which is given which deals with financial credit note. That also you need to take care while doing the reconciliation. Now, deemed supply, there can be a case while verification, you might find out there are related party or distinct person transaction which may not be reported or may be reported. If it is reported, you should report separately in 5D because as we know that audited financial is prepared at PEN level, but while doing GST is at GST level, and state-wise state transaction, they consider, government has said that it will be considered as supply under GST. So that need to be taken care while doing your reconciliation, and it should be reported separately in their respective row, even though it is optional. Then comes your valuation, for which I have already discussed in my previous session about the sale of assets. Then there are separate line of business for that different valuation has been provided, like air travel agents and lottery tickets. So that valuation also need to be properly taken care. Now the person who are engaged in exports, they may be having a forex gain or loss. Though under GST they have no implication recognizing that there is a separate rule 5N. So even though optional, it is advisable to report in specific row, even though it has been missed out, if there is a non-compliances that advance is not reported, credit note benefit taken which is not eligible, those all while doing this reporting can be taken care. And if any tax payable can be paid, and that payment need to be done through DRC 03 because as it has been already discussed, November was the last day to do any changes in relation to 23-24. If it has been missed out, now nothing can be done. So if you will see 9C, the way it is drafted, it is taking care of the difference between financial and GST turnover. And when we come to 9, it is further dividing that GST turnover where we are saying we have a tax implication and where we are saying we don't have tax implication. Now the tax implication, even that is also further divided into type of supply to make sure that those reporting has been done properly. Because it can be a case, some supply may be related on export, SZ may be over-reported, under-reported, and those has not been corrected. There can even a case that B2B supply has been wrongly reported. Now, while doing report, whatever error you are finding, whatever under or over reported has happened, while filing those 9 and 9s, you can correct it. If you have corrected in 24-25 till by November 25, then it will form part 5 of GSTR-9, table 10 and 11. If you have not corrected till November, then you can now give the rectified figure in GSTR-9 and 9C and make a separate disclosure for those, making sure that if in case in future, if department asks for discrepancy between what has been reported in R1 and what is forming part in your 9 and 9C are not matched. The prima facie, government has said GSTR-9 need to be filled based on GSTR-1, and for which for tax payment 3B will be referred. But there can be a cases that while doing the reconciliation, you might have identified some or the other discrepancy. So like common thing which the people ask, whether if we have missed out to report exempt supply, can I report? Sure, you can. Duly report your exempt supply in table 5 of GSTR-9 and accordingly in table 7 of GSTR-9. So the reporting missed out or any error done, both can be taken care. As Jagadeesh was talking about, if you see my books turnover, what is paid during the period through GSTR 3B form part of table 4. what is being paid in 24-25 of GSTR 3B form part of table 10 and 11. But if any short payment is there, which you have paid through DRC 03, again it will form part of table 4, where we are saying about tax implication in GSTR 9. So those things need to be properly done. Now it has been noticed that even while reporting export and all with or without payments, error has happened. As you have opted without payment, by mistake reported as with payment. Even those type of error, if done, can be corrected. So proper reporting is important because in previous till 2021 notices, audits, scrutiny, all has happened. And the reason for those were improper reporting. As we are standing and we are going to file our 7th time GSTR-9 9C, we can make sure we can learn from our past mistake. Even like if you will see, he discuss about primary source of information, additional source of information. And in additional, the additional source of information are not just for reporting purpose, but you should also take the guidance from it, what you need to make sure while filing 99C. Now, in additional source, he talks about part 5, means the things which you have done in 24-25 from April to November. But over there, he also talks about notice and order. So if any notice and order which you have suffered for past period, you can learn from that, then what error you did, which you should take care this time while filing 99C, so that those situations not arise in future. So basically, we want to focus on that, how the filings, any error done, how it can be corrected. Now here, e-commerce operator is the new table which has been inserted. That he has already discussed, 4G1, which required to be filled by e-commerce operator, and then again table 5, which is the supplier has to fill, who is doing the supply through using the platform of e-commerce operator. Now, all this table 4 and 5, separate reporting is mandatory. There is no more optional field. You have to separately report all your B2C, B2B, exempt supply, your export supply, all need to be separately reported. Plus, as we discussed, B2C is a summary level net to be reported, means net of debit, credit note, amendment. But when it comes apart from B2C, there are separately, they have provided from table 4I to 4J for credit note, debit note, amendment having upward impact, amendment having downward impact. Those also mandatory to be reported. Those also are not optional. So you have to separately fill your credit note and you have to make sure the detailed furnishing credit note match with your GSTR-1. Because if it is not matching with GSTR-1, you may not get benefit. Debit note, even though not matches with R1, you are reporting higher, no issue, government is getting that tax. Amendments. Table 4 amendments which we are talking about is the amendment which is made during the period. So 23-24 reporting error done and reporting error corrected in 1 and 3B of 23-24 will form part of table 4. But if any amendment has taken impact in 24-25 will be taken through table 10 and 11 of your GSTR-9. So this all reporting pattern you need to be careful. So within the year 23-24 will be taken care by table 4 and table 5. After the period impact, that is from April to November, will be taken care by part 5, table 10 and 11 with respect to outward. Jagadeesh.
Yes. Yes. As ma'am said, this is the last chance. If you commit any error at the time of filing monthly returns, this is the last chance to correct all those errors. So 95% of the litigation can be avoided by reporting correctly the GSTR-9 and 9C. So yes, in the table 4, you may get the another doubt that there may be chances that previous year turnover you might have reported in the 23-24. Let's say March 2023 liability you have discharged in the April 2023 GSTR 3B. In that case, you have that figure will populated in your GSTR-9. So whatever the liability you discharge through this 12 month in the 12 months, that is from the April 23 to March 24, all this liability will get auto populated in your GSTR-9. So from the auto populated figure, you have to remove the liability pertaining to the previous year. Let's say you have a discharge liability of 120 rupees. Out of that 120 rupees, 20 rupees pertaining to the previous year, that is the 22-23 period. So you have to remove that 20 rupees, and the liability pertaining to this period, current period, that is 23-24, only you have to retain only that liability in the table 4. So from the auto populated figure, you have to pull out that previous period liability. So that's all about the table 4. If any current year liability disclosed in subsequent year, obviously we need to report it in the table 10 and table 11. And still, if we paid any liability through DRC 03, that we need to report it in the table 4. This is all about the reporting of the taxable supplies. So moving on to the next slide. Yes. So coming to the reconciliation of books turnover, as we discussed in the previous slides, that what is my taxable turnover means table 4 plus 10 minus 11 is my taxable turnover. Whereas coming to the exempted turnover, table 10 and table 11 is not applicable. Let's say if I forgot to report my exempted turnover in the 23-24, can I, if I can I disclose it in the table 10 and table 11? No. Even though if you let's say you have report out of 100, you have reported only 80 rupees. That 20 rupees you missed to report it in your monthly GST returns. That is 103B. So what you have to do is you report entire 100 rupees in the table 5. You no need to report it in the adjustment tables. That is the part 5, that is table 10 and table 11. The table 10 and 11 will be applicable only to the taxable supplies, that is which is subject to the tax. So you have to consider only the actual amount as per the books, irrespective of whatever it is considered in your GSTR 103B. So if you have not found any error beyond November 24, so we are in the month of the December. Now we are started preparing workings of 9C. So now we have noticed the additional liability because of short payment of taxes or excess ITC claim or ineligible ITC we have identified now. In that case, how we can discharge the liability? Discharge liability through DRC 03. And the DRC 03 payment should be done only in cash. Why cash? Why not through ITC? Can I avail ITC to pay the DRC 03 liability, the additional liability? The answer is no. Pay it in cash. Exception case is that unless you have maintained the ITC balance in your electronic credit ledger, in that case you can pay this liability through DRC 03. Let's say you need to pay, you need to reverse the ITC of 1 lakh. But at the time of March 20, this 1 lakh pertains to March 2024. At that time, I don't have any ITC balance. So now in the current period, I have accumulated that 1 lakh. Can I use this 1 lakh? The answer is no, because the past liability you cannot pay with the current ITC. Okay. So if we have maintained, let's say if we have maintained the 2 lakhs since from the April 2023 to till date, but now you need to reverse only 1 lakh. In that case, you can use your ITC balance to discharge this liability. So that's the reason we recommend to pay only through cash in case of any DRC 03 payments are there. I think, yes. Coming to the summary, what is my final turnover? In case of taxable turnover is 4 plus 10 minus 11. And also the if I include the table 5 turnover, that's my whole turnover. It is a comparable figure with my GSTR-9 GST turnover as per the table 5C of the GSTR-9C. And coming to the summary tax payable, the tax paid and payable, I can check it in the table 9. what are the tax paid through 3B that will get auto-populated in my table 9, column 1 of table 9. What are the taxes I need to pay payable is in my column 2. So if there is any difference between my taxes paid and the taxes payable column, that I need to check where that amount you either pay it in pay through DRC 03, or if there is any reason you ascertain, you can mention that it in the GSTR-9C as a reason for the difference. And taxes paid, as already said, the taxes paid will auto-populated in the column 1 of the table 9. So table 9 is a comparable of the tax paid and the tax payable. So coming to the table 17, this is the mandatory table. Initial for the initial period, they have given put this table as an option, but now it's mandatory to fill this table. So what is the HSN outward? So what are all I need to consider in this? So in the table 4, all my outward supplies, excluding advances, and my inward supplies on which I need to pay tax under reverses, those two items I need to exclude from the table 4. And now coming to the table 5, I can exclude my non-GST supplies. If there is any non-GST supplies, I can exclude it. So my total HSN outward liability should match with my table 4 plus table 5 plus 10 minus 11. Exclusions are advances and inward RCM supplies and non-GST supplies. And this turnover should match with my table 17. So that's the validation thing for the table 17. Yes, now we should see some issues, the practical issues. In case of, we'll see the incorrect type of tax paid. Let's say actual the correct type of tax is CGST and SGST, but I disclosed in my GST returns as my IGST and discharged the IGST liability, and I have rectified that in the same financial year. Let's say I committed error, mistake in the 23-24 and corrected in the same year itself. In that case, I no need to do anything. Whatever the auto-populated figures in the GSTR-9, I can return it same. Or else you can, instead of doing it, instead of showing separately in the amendments, you can adjust that in the table 4, in the actual supplies itself. And coming to the next issue, my actual liability is CGST and SGST. And in my returns, I have disclosed it as an IGST. And on the invoice also, I have disclosed it as an CGST and SGST. But the rectification is done in the subsequent year. That is from the April 24 to now. In the current financial year, I have done the rectification. So here we have two options. One, tax adjustment can be made in table 10, 11 or 14 of GSTR-9, or you don't do any adjustments in the GSTR-9. Obviously, you will get the difference in the GSTR-9C, that is in the tax payable column, tax reconciliation, tax liability reconciliation table. In that, you can mention the reason for this difference. So these are the two options. And coming to the next issue, the actual liability is CGST and SGST, and you have discharged IGST, but you have not made any rectification, either in the previous year or in the current year. We have not made any rectification. In that case, you have to report the correct type of tax in the table 4 itself. And obviously, in the GST and the table 9 of GSTR-9, you will get the difference. That is the tax paid versus payable. You will get a difference. So you have identified the reason for the difference. In the IGST balance, it will show it as an excess paid, whereas in the CGST and the SGST, you will notice a short paid of tax. In that case, what you have to do is you claim a refund of IGST and discharge CGST and SGST now. So for this, you no need to pay any interest as per section 77. In case of wrong payment of the tax, there is a separate section called section 77. In that case, you no need to pay any interest on this wrong payment of tax. So now coming to the incorrect type of tax charged. Actually, my correct type of tax is CGST and SGST. In the returns also, I have discharged CGST and SGST, but in the invoice, I mentioned as an IGST. In that case, it's not an error. You have correctly discharged your taxes. Only you have reported IGST in the invoice. In that case, you no need to do anything for the auto-populated figures in the GSTR-9. And the applicable tax is CGST and SGST, but you have disclosed IGST in your returns, and on the invoice also you have mentioned IGST. In that case, option 1, you correct the tax in the table for itself. You make the supply as an CGST and SGST only. You pay the tax of CGST and SGST and claim the refund. Or else, option 2, you are having disclose IGST as per returns and wait for the departmental auditor the assessment. That's the obvious case. Even that if we are department identifier, so that time anyway there is no interest on this for the wrong payment of the tax. So you can take the risk on this. Now coming to the adjustment of advances. At the time of receipt of advance on services, you have paid the tax. Okay. Again, on that advance, you have read the invoice. Again, on the invoice also, you have paid the tax without adjusting this advance. You have forgot to adjust that advance. So on the same transaction, you have paid the tax twice. You have not rectified this. So how we can how to report this type of transaction? So in that table 4, you need to report only the tax invoice, not the unadjusted advance. You don't need to report. So obviously in that table 9, you will get the difference. So whatever the difference you get, you can go for refund the taxes under excess payment of tax. You can file an application of excess payment of tax. You can claim the refund of that excess paid. That is the unadjusted tax paid on unadjusted advances. So we'll take some questions on this turnover part. Rajesh Mangal sir has asked in GSTR-9 whether excess tax paid can be adjusted against excess ITC availed in 3B. Whether excess tax paid, actually this is not the correct method, sir. You excess paid of tax, you have to claim the refund. Before that, you have to pay the tax, the liability what you have asset and additional liability.
So,
yes, sir.
am I audible?
Yes, sir. Yes, sir. Yes, sir.
Actually, we have wrongly paid excess tax in 3B and excess availed ITC. So can't we adjust the same in the and reflect the correct amount in GSTR-9 and adjust the same? Why to claim that refund and go through this excess payment?
Yes, sir. Law will not permit, sir. The department may litigate it. But as per law, you have to go for refund of the taxes paid tax and payment of this additional liability.
No, it's okay as per law, it will be followed, but whether practically we can follow that or not?
Practically, my recommendation is don't follow like that, sir, because surely department will litigate it, sir. In lower level, it will not get solved. Only at the AP level, we can get an favorable. Yes.
Okay. Thank you.
Yes, sir.
Rajaji, is depend how much is the quantum we are discussing. Okay, based on that, you have to decide the risk. Excess tax paid, if you want to adjust with excess liability, you make sure you give a proper disclosure in 9C.
Yeah.
In 9C table 9, I have the option of unreconciled payment because over there my tax paid and tax payable, though difference will not come. But in GSTR-9 of table 9, there will be a difference. Even though 9C, if 9C is applicable, then you can take advantage. You can write over there as a disclosure, even in table 12 and table 14. But based on the quantum, you have to decide. And it's also depend upon officer to officer. Some officer, okay, fine. Because the reason is you are saying you have paid excess in GSTR-3B. The first thing is how while reconciling, I should consider a lower turnover than compared to 3B. That is where you will have to first justify excess payment. Then only the question of excess ITC availment adjustment will arise. So it's not simple. Though in GSTR-9 and 9C, you can do the reporting properly and try to take advantage. but to the extent there will be a legal fight.
Okay, thank you.
Yeah.
And one more question is from the Om Jain. He's asking, is RCM is applicable on the ocean freight paid? Sir, the concept of deemed ocean freight is not there now. In the case of Mohit Mandel's case, the Supreme Court has given judgment in favor of the SSC taxpayer. So from then, there is no such concept of deemed ocean freight. But if the service provider is of the foreign party, in that case, you need to pay under RCM as an import of service.
Basically, you have to see your is CIF or FOB. If it is CIF purchase, where your freight is including and you are purchasing from your foreign party, he is taking full in charge of delivery to your place, then no RCM. But if it's FOB, where you are required to arrange the freight, if you are engaging a foreign party to do that, then you are liable under RCM. Based on that, ocean freight liability will be determined.
Okay.
Then we have other query also.
Yes, sir. At the end, we will show the forms, sir. GSTR-9 and 9C. Someone is asking to show it in the complete form, GSTR-9 and 9C. At the end, we will take up that also, sir. Ma'am, can you please continue with the ITC part? I think Hitesh will take up the further session.
Fine.
Yes.
Am I audible?
Yeah.
Yeah. Just a moment. Let me share my screen first. Yeah. So before starting the discussion on ITC part in reporting of GSTR 9 and 9C, let me first discuss in brief what the department actually wants at our end and what it actually cross-checks when it does the scrutiny or investigation at its end. The department is always worried about the compliance with the GST law, whether the proper taxes have been paid. Now, what do we mean by the term proper taxes has been paid? By the term the proper taxes, if we go by in a very simple way, we can just say total output tax liability minus total input tax credit. Now, what will be my total output tax liability? It will be my total turnover into the rate of tax which is applicable on the product or services I am dealing in. Turnover will include taxable turnover. Now, taxable turnover and exempt turnover both will totally aggregate into my total turnover. But for the purpose of output tax liability, only the taxable turnover needs to be considered. Since on exempt turnover, there is no GST payable. With regard to ITC, when it comes to ITC, how much ITC am I eligible to claim? We need to decide it as per the eligible ITC which we have in our books of accounts and which we have claimed in our monthly returns. For all these purposes, we need to have audit working papers. We need to classify our products and services under the correct HSN. We need to take care that our all the credits to the PL, the GST implication on all the credits to the profit and loss account has been done in a proper way. The valuation which we are doing to determine our value of supply which we are providing should be in line with the provisions contained in section 15 of the CGST rules, CGST Act, and the time of supply. The time of supply also plays an important role because in case we don't follow the time of supply rules, then we are giving ourselves a chance to get penalized for paying delayed interest and penalty as well. Coming to the part of input tax credit. In GSTR 9, we need to fill 3 tables relating to the input tax credit. The first is table 6, the second is table 7, and the third is table 8. Table 6, table 7, and table 8 will be discussing in this format. Table 6 now can be divided into 8 parts. 6A is an auto-populated figure which is a summation of all the ITC which we have taken during the monthly returns. It's the summation of 4A1, 4A2, 4A3, 4A4 and 4A5 of GSTR-3B. 4A1 of GSTR-3B relates to import of goods. If we have imported any goods of which ITC has been taken by us, it should be reported in table 4A1. Import of services gets reported in table 4A2. Reverse charge credit on tax on which has been tax which has been paid on the reverse charge basis by us, of which we take ITC, needs to be reported in table 4A3. Any ISD credit which we are receiving from our head office, then we will report it in 4A4. And all other forward charge credit with regard with the term forward charge credit, we should determine the eligibility as well. So all the forward charge credit which we are availing in our monthly returns in GSTR-3B, that comes part as 4A5. Now when it comes to GSTR-9, in table 6A, the auto-populated figure comes. Now in that auto-populated figure, both my forward charge and reverse charge ITC is included. Accordingly, GSTR-9 demands at my end to bifurcate such ITC into input service and capital goods with regard to both forward charge and reverse charge. Table 6B is the forward charge ITC bifurcation. Table 6C is RCM from unregistered persons. Table 6D is RCM from registered person. Table 6E, we need to report the ITC of import of goods. Table 6F, we need to report the ITC of import of services. And table 6G, we need to report the ITC of ISD credit. Table 6H is another table which is of very much importance in filling of GSTR-9. This is because with the incoming of the disclosure mechanism in GSTR-3B, whereby 4B to 4D1 disclosure gets started, if we have done any such disclosure during the monthly returns, then all the ITC which we have shown as reclaimed and disclosed it in table 41, we need to post it in table 6H of GSTR-9. If we don't do that, we are not filling the form as per the need. So we need to be very sure that if we are reporting figures in table 6H of GSTR-9, such figures have also been disclosed by us in table 4D1 of GSTR-3B. Now coming to this credits to the electronic credit ledger. Let's understand the credit flow. What credit will flow to my electronic credit ledger? All such credit which I avail through my monthly returns, such credits will be flowing through the electronic credit ledger. So we have divided this into two parts. The first part is which is reported through GSTR-3B, and the second part is which is direct entry to electronic credit ledger. For reporting through GSTR-3B, table 6B to 6H, as we have discussed in the previous slide, each such table is segregated differently so that we report the figures in the appropriate columns. Now, in cases where the figures go directly to the electronic credit ledger, the first case is trans 1 credit, second case is trans 2 credit, third and fourth case ITC-01 and ITC-02. All these figures go in table 6K to 6M of GSTR-9, whereby table 6K states transition credit through trans 1, 6L is transition credit through trans 2, and 6M is any other ITC availed but not specified above. Tran 1 and Tran 2, as on current date, it is of not much relevance because the filings must have been done in the prior periods. But with regard to ITC-01 and ITC-02, I think when there's a transfer of a business or there's an amalgamation, merger or demerger of a business, when one business entity gets converted into a different business entity. Let's, for example, say when a proprietorship firm gets converted into a partnership firm or a partnership firm gets converted into a company, such ITC-02 forms needs to be filed, whereby transfer of ITC lying in my old registration gets transferred to the new registration if we file such form. So these all credits form part of they directly reach my electronic credit ledger without routing it through GSTR 3B.
Yes.
Now, coming to total reporting of input tax credit. Total reporting of input tax credit, we need to look at the total ITC which we have booked in our books of accounts. ITC can be of two types, one which we have availed and the other which we have reversed. So, one which we have availed. Now, availment can also be taking place in the same financial year and it can also take place in the subsequent financial year. The same goes with the reversal patterns as well. So, in which table of GSTR-9 do we need to report such ITC? If we have availed ITC of financial year 23-24 and availed the same in the same financial year, then we report it in table 6 of GSTR-9. If we have availed the ITC of 23-24 in financial year 24-25 monthly returns up to the specified period, that is till 30th November 2024, then we need to report it in table 13 of GSTR 9.
Hitesh, 1 minute.
Yeah.
I hope screen is visible. So this is a table showing you for ITC part. As you can see, there is a table 6A, which is basically your table 4A total. So basically, total 4A total. When I say table 4A of GSTR 3B, I mean to say all the ITC. Means either it is for import of goods or import of service or RCM ITC or ISD ITC or all other ITC. This is the total ITC, which will basically you have to do the total of all 4A1, 4A2, 4A3, 4A4, 4A5, which is what get auto-populated in GSTR-9 in this table 6. Now, this ITC, which is the total of table 4A, and the way, the manner it is reported in GSTR 3B, the same manner in GSTR 9 also, they want us to split. Like import of goods, we report in 4A1. Here there is a separate column, table 6E, where you need to report for it based on the category it is, capital goods or input. And these are all mandatory field. So you have to give a specific category wise reporting need to be done. And even that category also you need to further divide into input and capital goods. And this bifurcation is mandatory now. It's no more optional field. Now, if you get import of service, which is table 4B2 of GSTR 3B, will be reported in this table 6F, import of service. Over here, there is no category because it itself is saying service. So service will be coming over here. How you will come to know about the bifurcation between input service and capital goods. Capital goods is very simple. Go to fixed asset schedule, see whatever addition has been made. Because under GST definition, they have done very simple compared to which was under pre-GST design where various checks were there. It is simple, just check whether it is capitalized to your books of account under fixed asset. If it is capitalized, then it is a capital goods. If it is not capitalized, then it may form under input or input service based on the category it is. Now, import of service we did. Now coming to 4B3, which deals with your RC. So 6C and 6D in table 6, which deals with your RCM reporting. Now this RCM reporting, they divide it first into two parts. First saying registered, second they are saying unregistered. So in 6C, they want you to report unregistered. 6D, they want you to report registered. Now, what is a registered person? Basically your GSTR-2B. The data which is getting auto-populated in GSTR-2B, where RCM, your supplier has furnished as yes. This is where you have to furnish the detail. And that detail you need to further divide into input, capital goods, and input service. As of now, most of the SSC, it is basically an input service, which is a notification 30. So you have to file your detail under input service. Now in input, capital goods, and input service, they have given one option. Capital goods you need to report separately only. There is no optional field. But when it comes to input and input service bifurcation, they are saying you can report under input. But in RCM, as you are well aware, it's more on input service. So reporting need to be done based on 2B in 6D under input service, based on which is other supply, other covered under RCM will be covered in 6C. Based on the category, you have to report. Now coming to the part of 4A4 ISD credit is also specifically covered over here. 6G, over here you will report your ISD related credit. Table 4A5, which is deals with all other ITC, and which is what your table 6B deals. Again, over here, input, capital goods, and input service. Now, over here, you need to be careful that now what we are reporting in table 4A5 of GSTR-3B have also the impact of table 4D1 of GSTR-3B. Now, we all know reporting pattern of GSTR-3B has been changed from August 22. Now they want us, whichever ITC appearing in 2B to be reported. I'm talking from the period of 23-24, not now where IMS is there. In 23-24, they want us to reflect whatever showing in 2B as ITC, which we need to divide in 4A, 1, 2, 3, 4, 5. So total 4A will come. Total of 4A based on GSTR-2B. Apart from that, if there is extra RCM liability or import of goods or import of service, because import of service will not be captured in GSTR-2B, and import of goods also there was some technical problem. All data were not getting properly auto-populated. But 2B was the base. Based on 2B, I have to report if any out of that ITC I am not claiming or I am parking temporary, I was required to report in 4B2. I'm not talking about the reversal, 4B1, permanent reversal. I'm talking about the ITC which we are required to park, which we are saying we will claim subsequently. Plus, we also have an impact of last year ITC claim in current year, which also we were adding to 4A5, showing as a 4D1 to show that it was the previous month's ITC, which may be of past, which may be of the current. When I'm saying past, I'm saying 22-23. When I'm saying current, 23-24. So there was an impact of 4D1 due to which this data of 6B sometime based on all other ITC of 2B was exceeding due to 4D1 impact. So the ITC which I am reclaiming, which I have parked initially and I am reclaiming, that ITC you have to separately report in table 6H. Reclaim ITC need to be separately reported. And this ITC will not be bifurcated into input and input service capital goods. So basically 4D1 will be reported in table 6H and balance of 4D1 will be reported in table 6B. By dividing into input, input service, and capital goods. So balancing figure of table 4A5 after reducing 4D1 will form part over here. Bifurcation of capital goods, I already said how the checking to be done. For input and input service, you have to see what the line of business client is into. Based on that, you can do, or otherwise it is still optional. You can report all under inputs. Now, this is the way that, and anyhow, you can't show ITC more than what you have reported in 3B. So what is availed in table 6 will match with your GSTR 3B ITC claim in total of table 4A. And when we comes to reversal, this reversal is also based on your GSTR 3B. But table 7 reversal, you can show higher and you can pay it through DRC 03. But while reporting also over here, you need to be careful. Now there is called table 4B1, which is mostly a block credit. So you have to specifically report in 7E block credit, permanent credit, which you are saying. But there may be a reversal you are not doing just because of block credit, maybe due to some improper reporting or irregularity, something you have done. If you are correcting, you can use other reversal. Reporting in these reversals are also optional field, but it's important we report separately each and every head. Reason being, what will happen now? 23-24 was having clear picture to be based on 2B. Department can easily, by knowing your business, can decide which is eligible ITC, which is ineligible ITC, and what you reversed and what you not. So based on this proper reporting, you can make sure and you can show to the ITC, to the department. Suppose if based on 2B they are saying 10 lakh to be an ineligible ITC, so in 3B there is no separate way to show that, it's only 4B1. But over here by reporting, you can say that, see, I have done more than 10 lakh as ineligible ITC. But it's also depend upon case to case. Sometimes it's preferable to report in other reversal where there are cases where it's not been properly reported or some issue is there. But you can report separately and it will also give idea to the officer whether you have comply or not. Like rule 42-43, we know it's an exempt supply if anybody is having. If anybody has reported anything under exempt in table 5D, they will come to know you are required to pay reverse under rule 42-43. So they will check whether reversal has been done or not. Those proper reporting will make sure and make the department ensure that you have done the compliances. So this is what I was trying to say from table point of view, plus what Hitesh was just now discussing about the ITC avail, which need to be reported in table 6, and which he said, which is claim in 3B, irrespective of the fact whether it belongs to 23-24 or it belongs to 22-23. All the ITC which you have claimed in 23-24 will be reported in table 6. All the reversal which you did in 23-24 will be reported in table 7, irrespective of the fact which period it belongs to 22-23 or belongs to 23-24. Then he was discussing about the fact of carry forward impact, table 12 and 13, that there may be a case that now after finalizing you are coming to know you have excess avail. Instead of going through DRC 03, you are planning to do through 3B. Now, 1 November was the cutoff date, and this reporting was to be done based on November. Now that November, if you have done any reversal relating to 23-24 in 24-25 will come over here, and if any ITC you have availed relating to 23-24 in 24-25 will come in table 30. But these scenarios will come only and only when a person is not reporting in 2B, as per 2B, because as assuming all person has started reporting based on 2B for 23-24. If they have done proper reporting, then what credit need to be reversed they would have. There will be very less chances that reversal or ITC avail in the 24-25 will arise. Reason being, I have availed, maybe I have parked under 4B2, but the ITC which I am going to reclaim in 24-25 does not means availment. It's not a first availment, it's a reclaim. So that will not form part of table 13. However, if any books related ITC is there, which has been claimed in 24-25 based on GSTR-2B, then table 13 will come over here. And if any reversal, if anybody has done in 24-25, then table 12 will come. Over to you.
Yeah. So as I was discussing, whereby we need to report the various figures of ITC in GSTR 9. Now coming to table 4C of GSTR 3B. We need to match the total net ITC which we have availed in our GSTR 3B with the net ITC which we are reporting in GSTR 9. Our net ITC as reported in table 7J of GSTR 9 should be matching with table 4C of GSTR 3B. There should not be any difference. If it is any difference is there, then it can only be either two because of the two reasons. One of the reason will be that you have not shown the reversal in the monthly returns, but you are showing such excess reversal in your annual return. And the second difference will be erroneous credit reported in GSTR 9, either excess or short. So in case you are getting a difference between table 4C of GSTR 3B on a consolidated basis, when you compare it with table 7J of GSTR 9, then these two can only be the reasons for such differences. Now, how do we reconcile the ITC which we report in GSTR 9? The net ITC which we have availed in GSTR 9, that means we are saying to the government that this is the net ITC which we have availed. So availment will definitely go to my electronic credit ledger. Now the total net ITC availed which I have, suppose I have availed 50 lakhs of ITC, and we know that in table 9 of GSTR 9 there are two parts, tax payable and tax paid. Tax paid is again further divided into two parts, paid through cash and paid through credit. So whatever the tax which we have paid through the credit ledger, that we need to realize that is the ITC which we have utilized during the year. So out of 50 lakhs, we have paid 48 lakhs through our tax paid through ITC, 48 lakhs, then we should make sure that the remaining 2 lakhs is our closing electronic credit ledger balance as per the GST portal as well as the audited books of accounts. If that is not matching, then we need to work out our workings in another way.
So what does just Hitesh said? Same thing, I'm just taking you over here. Now, after table 6, filling the detail, in table 6, only this table 6A will get auto-populated. Balance figure, basically all this detail will get auto-populated based on your GSTR 3B filing. Reversal will form all other reversal, then you have to divide your reversal part based on the rules applicable to you. Now this is talk about this 7J check. So this is my net ITC available for utilization. It's not ITC utilized, it is ITC available for utilization. So this ITC which I am saying should be equal to my GSTR 3B table 4C. So over here, if you will see my table 4C, my total ITC is coming 1 crore 50,83. The same thing should form part over here, 1 crore 50,83. So the difference should come 0, most of the cases. But there can be a situation that while doing verification, like we discussed how you should verify the ITC, you may came across where the ITC, ineligible ITC by mistake has been availed and you are planning to reverse to DRC 03 and therefore you have reported in table 7 as a reversal. Then that could be a reason for differences, and based on that, those reason for differences, you can write that you have made the payment to DRC 03. And similarly in 9C when we come, though Hitesh will be taking through it, difference will come, and in this unreconciled ITC reason 1 or 2, you can write that this difference has come due to the fact that, of excess avail or ineligible ITC avail, and you are reversing it and paying it through DRC 03. So over here in table 13A, you can write the reason. Now coming again, one more check he discussed. This is ITC availment of 9 matching with GSTR 3B. Then he talks about electronic credit ledger. Now we do one more check based on electronic credit ledger. So based on 7J, I came to know what is the ITC I'm available to claim. Sorry, I have claimed. Then I would be having my electronic credit ledger opening balance, closing balance. Refund if based on SSC to SSC, if they are eligible, then there will be one this. Now what this checking is? This checking is availment versus utilization. Through table 6 and 7, I check whether my ITC claim reported over there, whether match with ITC actually claim based through GSTR-3B. Now I am checking the ITC utilization, which I have done in GSTR-3B, whether matches with my closing balance lying in electronic credit ledger. These are basic check which has been implemented in our template of 99C, and we are discussing so that if any error has happened while reporting, you will come to know about it immediately. Like in this case, based on 7J, based on paid through IATC. Now, based on 3B, I will come to know under which head, each head, how much ITC I have availed and utilized toward my tax payment. So I came to know about this fact that IGST, I utilize this much, CGST, I utilize this much, SGST, I utilize this much. Now I have a opening balance. I can use my opening balance also to make the payment to tax, and I have a closing balance. So what I'm doing is, based on this, I'm driving what was the net ITC I availed. And that I'm checking with 7J, means ITC I have shown that I have availed through 3B. Based on that, I came to know there is a difference of 76. When I went through electronic credit ledger, I came to know. So if you will see, I was eligible to claim, I was having a ITC of 40 lakh 91. Out of, if you see, I can utilize ITC to the extent of this much, 62 lakh 80. But I utilize the ITC of 6204. And my, as on date, as on 31st after filing of March, my electronic credit ledger closing balance is showing 0. If I see what I availed, what my opening and what I utilize, my closing should have 76K, which is not there as per my electronic credit ledger reading. So therefore, we went and to check what happened, and we came to know there was one voluntary payment made for different financial year, not for this year. But what I mean to say for, from this checking, if this is not matching with my electronic credit ledger, it means there is some error has been done while reporting. So this work as a check to make sure if improper reporting, it can be immediately taken care. Plus my ITC, what I have availed, either it should be utilized, it should be, or it should be lying in my electronic credit balance. So availment will be equal to utilize plus closing balance line. So that's the one check which he was discussing about.
Yeah. Moving forward, matching of credits. Now, whatever input tax credit which I have in my books of accounts, this can lead to three scenarios. Like the first one would be like whatever credit is appearing in the portal and the whatever credit is appearing in my books of accounts, that is exactly matching. So we don't need to take any action on those credits. Again, there might be a scenario where the credit is appearing only in books but not in the portal. So in this case, we need to check if we have availed the ITC, then it can lead to litigation because of 16 to AA. But we need to check whether the same credit can be taken as per Rule 36(4) or invoice based. Again, there might be a situation where credit is existing in only in portal but not in books. So, what can we conclude from this scenario is like if it is only in portal, one scenario may be that the supplier has wrongly furnished my GSTN instead of some other person's GSTN which he ought to furnish. That's why it is lying in my portal. The other scenario may be it is ineligible. I have not even availed such credit. And since I have not availed such credit, I have not even reversed that credit. And thirdly, or another case may be that although the credit is lying in my portal and based on my GSTR 2B, I have claimed such credit as well, but I forgot to record such credit in my books of accounts. So these can be the various scenarios when we try to match the credits as per our books and as per the portal. Coming to ITC reconciliation with books. How do we reconcile the ITC which we are reporting in GSTR 9 with the ITC which will be there in our books of accounts for the relevant financial year? So whatever ITC, the net ITC, whatever I have reported in table 7J of GSTR 9, after including all my availments and after deducting all my reversals, whatever net I have availed in my GSTR 9, which I report in table 7J of GSTR 9, in that, if we add the ITC which we have availed in the subsequent financial year, and if we deduct any ITC which we have reversed in the subsequent financial year, the same which we report in table 12 of GSTR 9 in case of reversal, and the in case of availment which we report in table 13 of GSTR 9, if we add and deduct the same, we come to the figure ITC as per books. Mind you, this is the reconciliation of ITC as reported in GSTR 9 with ITC as per books. Now coming to the various issues which we face. Incorrect claim of ITC. What we can do, like we ought to have claimed IGST input, but we have wrongly claimed CGST and SGST input, and we have not rectified it in our monthly GST returns, either in the current year or even in the subsequent period till the time the rectification was possible. So we can do like SSE may rectify the error in GSTR 3B of the current period and disclose the details in part 5, table 12 and table 13. Suppose we have taken the scenario to be in a way that we rectified the error in the subsequent period. So what we will do, we will be reporting our figures in GSTR 9 in the correct pattern. In the IGST, CGST, we will increase our IGST ITC and we will reduce our CGST and SGST ITC. That will create some difference in table 6, and we will, since we have corrected the errors in our subsequent period returns, the reversal of CGST and SGST ITC will be reported in table 12, and availment of IGST ITC in the subsequent period will be reported in table 13. Accordingly, the situation will be revenue neutral for the department as well, and the same thing has been also allowed in the following two case laws. The Bharti Airtel circular as per circular number 26 bar 2017, and Bharti Airtel case of Delhi High Court. Also, this in the case of Sunday Chemicals versus Commissioner of Central Tax, Madras High Court has also approved of the same, that we can correct the ITC claim under the correct head as per the procedure which we just discussed now. Table 4B to 41 application and reporting, as was discussed by ma'am earlier. This is a very typical case where the application of this reporting will be very relevant for the filing of annual return of this particular year. If the registered taxpayer has followed this reporting pattern, then whatever he has reclaimed in 41, he need to put it separately in 6H of GSTR 9, and such bifurcation should not be included in table 6B. Such bifurcation into input service and capital goods should not be done in table 6B. Now, what happens when you, since the reporting pattern of GSTR 3B was that whenever you reclaim any ITC, you add it back in table 4A5 and you also disclose it in table 41. But at the time when annual return figures got auto-populated, they failed to update the form in table 6A. Table 6A is still considering my figures of total of table 4A, which means suppose in the month of January, I had to reverse 1 lakh ITC in table 4B2. So I reversed it in table 4B2. But in the month of February, when I reclaimed such ITC to the extent of 1 lakh, I added it in 4A5 and I also disclosed it in 4D1. Accordingly, my 4A5 got inflated by rupees 1 lakh. So in this case, what happened when my figures got auto-populated in table 6 of GSTR-9, the inflated figures got auto-populated. Had the figures gone auto-populated as 4A5 minus 4D1, the issue would not have arisen. But since the auto-populated figures are not getting net off with the disclosures made in table 41 of GSTR 3B, that is why this issue is arising. So what we found out that is, suppose where your ITC, your 4D1 disclosure you have made and you have reported in table 6H, when you go to your table 8 of GSTR 9, you see that a negative amount of difference is coming in table 8D to the extent of such reclaim, considering all other ITC is matching with your books of accounts. So, in many cases, we have found that notices have been issued in case figures have been reported in negative in table 8, table 8D. So, in order to avoid that, what we can take as a step, we can put the same reclaimed figure which we have reported in table 6H as a negative figure in table 8C. Otherwise, we will be inviting litigation on our own. Just in order to means table 8C, the purpose of table 8C of GSTR 9 is not actually this. The main purpose of table 8C is something different. But in order to avoid litigation and in order to just not make the officer feel that there has been a reporting error, we need to report the negative figures of ITC reclaimed as reported in table 6H in table 8C to nullify the effect.
You can see table 8. Now in table 8, ITC as per GSTR 2B is getting auto-populated. Table 8B is also a auto-population based on the data furnished in table 6B and 6H. Now what is table 6B and H? 6B and H is basically your all other ITC, which we have divided into two parts. One part, the 4D1 claim, which we are reporting in table 6H, and the balancing figure, which is reporting in table 6B. So it is a all other ITC, which is divided into two parts in GSTR 9 reporting. Reclaim ITC table 4D1 in table 6H and all other balancing amount in table 6B. Now on adding of this two, this data is auto-populated and difference is identified. Now the difference, which if you will see, is coming to in negative for all heads ICS, and this is due to 4D1 because my ITC in 4A5 is inflated by table 4D1 because 1 year I am reducing, but I am reducing in 4D2, but still it is a part in 4A5. Next month I am adding in 4A5, therefore increasing my figure, though I am reporting in 4D1 separately to show that it's a last month or previous month's ITC I am claiming. But my 4A is getting inflated due to 4D1. So due to this reason, it is coming negative, one of the reason. Now, As of now, from the department and the clarification which has been issued and the instruction which they have given in 99C, they are nowhere discussing how to be dealt with 4D1. Till now, they have not come up with any clarification. But in our office, what the step we have taken is to report in negative 4D1. So this ITC which you are seeing is basically what is reported in table 6H of GSTR-9 is what we are reporting in table 8C as negative. It may be noted that table 8C deals with availment of current year ITC in subsequent year. But as no option is there and no clarification is there, that's why we are reporting it in negative to show that it's a past year ITC which has been claimed in this year, thereby nullifying the impact to some extent. Now, in this case, it was not just 4D1, which was the reason for difference. There were other reasons. But in most of the SSC, if they are following 2B properly, it will be only 4D1. Here in this circumstance, this SSC was not following the 2B pattern correctly. Due to this, there were other reasons. Now, when we work, we make sure that we identify each and every reason why it is happening. So over here, we notice by mistake in few months, they claim more than what they were eligible. But they subsequently reverse when they reconcile the full year. So we came to know that they have excess avail, which they have reversed. Due to that, I was getting the difference. And another reason which we identified was the auto-populated data and the data which I got from 2B was not matching. What happened? If you go to GST portal, you can download table 8 full details transaction wise. The data which I was downloading on table 8 fully was not matching with the data auto-populated, though ultimately the data which I downloaded was matching with 2B. So it seems some technical issue. But as we are filing 99C and if this technical issue can't be resolved on time, so even though differences are coming, but you can keep a record of it. So make sure if any notice or anything comes, you know what you have reported, where you have reported. Though table 8C specifically deals with 23-24 claim in 24-25. Now, another thing to be mind, as per me, 8C has no value. It is indefinite. Reason being, whatever, if person is following 2B, whatever shown in 2B, they would have claim in 3B, though they might have parked in 4B2 as a temporary reverse. But I have already claimed, that is reclaimed. So there cannot arise based on 2B a reason that has been claimed in 24-25 until and unless a person has done improper reporting in GSTR 3B. Then based on your 2B, you have to write if any of this situation arises that ITC was available, but you haven't claimed. It may be a case you might have reported 3B lower than what is appearing in 2B, and the ITC which is appearing, it's an eligible ITC and not even claimed till November. ITC available but ineligible. This is basically a 4B1 reporting based on 2B. Whatever you have considered as ineligible and reported in 4B1 need to be reported here. IGST paid on import of goods doesn't get auto-populated. You have to fill. This data doesn't get auto-populated from 8. This all data you need to fill. So IGST import of goods, basically you can tag with your table 6 where I discuss you can do the import of goods reporting. So here we are discussing. So here based on 6E, you can do the reporting. So this is all about table 8. Over to you.
Hello,
Yes, sir.
I have one question here.
Yes, sir.
See, since now 8A become it is 2B, what it is auto-populated.
Yes,
So
sir.
there is no value for 8C. That means related to 2023-24 claimed in 24-25.
Yes, sir. I'll be touching upon that topic in a short while. What are the figures which we will need to report in 8C and table 13? If you can just wait for 5 more minutes, I
Okay.
hope you get it clarified. Now, moving on to the topic of ineligible ITC reporting. Suppose there is an ineligible ITC. So what we need to follow there is, firstly, we need to check whether ineligible ITC has been claimed in the monthly returns. If yes, then the second step which we need to do as our check part is like we need to check whether the same has been reversed. If yes, then we need to report straightforward in table 7 of GSTR 9. If no, then we can report it in table 7 of GSTR 9 and make sure taxes have been discharged by DRC 03. In case an assessee who is liable to file only GSTR 9 and GSTR 9C is optional and he files only GSTR 9, then this can be the method which he can adopt to report and reverse the ineligible ITC. The moment you report any figure in table 7 which you have not reversed in your monthly returns, you are bound to get a notice from the department saying that your total reversals as reported in annual return is not matching with the total reversals as reported in your monthly returns. So for that documentation purpose, which would help you in a litigation, you need to keep that copy of DRC 03, and at the time of making the payment through DRC 03, the reason you can select is annual return in the drop down which comes there. Contrary to this, if the taxpayer is liable to file both 9 and 9C, then we need to check whether such ineligible ITC has been accounted in his audited books of accounts. And if such ITC has not been accounted in his audited books of accounts, but it has only been wrongly claimed in the monthly returns and not reversed thereof, then what my approach would be to create a difference in table 12 of GSTR 9C, because my ITC as per audited books will definitely be lower by the amount of ineligible ITC as claimed in my ITC, total ITC claimed in the annual return. So automatically I'll get a difference, and in the reason for such difference, I can quote my DRC and file my GSTR 9C. Now, another reporting pattern which needs to be seen here, spillover effect reporting. This spillover effect reporting, suppose any ITC of last year, I mean currently we are filing annual returns for 23-24, so any ITC of 22-23 which we have reported in our 20, which we have claimed in our 23-24 monthly returns, the reason being the same got reflected in 2B of 23-24 and not of 22-23. Now, why this discussion becomes important at my end is because till last year, table 8 was being reconciled on the basis of 2A. And since this year, table 8 is being reconciled on the basis of GSTR 2B. So, had the manner of reconciliation in table 8 been the same, we could have taken a chance and we could have not reported the previous year ITC taken in current year in my table 6B bifurcation. We could have avoided that and reported elsewhere. Some of us report it as 8C negative figure. Some of us report it as any other ITC availed in 6M. It depends upon person to person who is filing the annual return. But since now the reconciliation comes to 2B, so it will not create, if I don't report this ITC of 22-23, which I have claimed in 23-24 in my table 6 bifurcation, then it will create a positive difference in my table 8 on comparison. And total ITC availed will also be less, because I am not reporting it elsewhere. Even if I am reporting it in table 6M, my net ITC in table 7J will take care, but table 8 will show a positive difference. It depends upon the approach wherever you are reporting it. But since the manner of reconciliation has changed in table 8, so I think it's better if we report it in table 6B of GSTR-9 itself, so that no difference comes in my table 8D column, table 8D row. When it comes to the part of GSTR-9C, we can report the same in table 12B of GSTR-9C, whereby it is said that ITC booked in earlier financial year but claimed in the current financial year. Coming to RCM reporting and reconciliation.
Before you move ahead, 1 minute. So we cover table 6, 7, 8 and table 12 and 13. Now let me take you to table 12 of GSTR-9C, where we have to give 8 books versus 3. Now ITC as per books, you will basically get from the books of account you have recorded. But there may be a case, it may reconcile, it may not. Now, there will be a earlier when GSTR-9 to be filed, it was based on GSTR-2A. Means I'm not saying it's based on 2A, but table 8, which was there, it was based on GSTR-2A. Though 2B was introduced from August 22, but we need to do recoup with 2A to give this table 8 of GSTR-9. Now, if any ITC you have reported last year in table 12C as a carry forward, it will become table 12B as a brought forward. Now in books there can be a ITC which due to non-reflection in 23-24 of 2B you might not have claimed, which got reflected in 24-25 will form part table 12C. So what I am simply saying is go to GSTR-2B of 24-25. Based on that download, see the invoice date. If in 24-25 download, your invoice date of 23-24 is appearing and that is still 30th November, basically 20 is the cutoff date, 11th is the GSTR-1 date. So if it is appearing before 30th November, then those ITC you can report in table 12C as a ITC relating to 23-24, which you would have claimed in 24-25. And this is what will go accordingly in table 13 also. Then this is basically the opening closing. This is also an auto populated figure 1,49, which is basically ITC, which is as per books, which you are saying last year you claimed over here in table 12B, and 12C is basically a carry forward. Now it's not important that table 12C match with 8C. I already told the reason, because this is 2B. So all the ITC which is there and a person is following in 3B, 2B format for the purpose of filing 3B, there cannot arise 8C, because ITC which is appearing in 24-25, in 24-25 GSTR-9 filing, it will be forming part of my 2B, not forming part over here. So 8C will not come over here, but means don't try to match 8C with table 12C. One thing. So because it is purely based on books, in books obviously we go by that financial year. But in GST, there can be a case of previous year transaction having impact in current, even current year having impact in subsequent year. So table 12C, don't try to match it with table 8C. Then we'll get the ITC and this will be compared with my total of table 7J. Now over here also difference can arise. What could be the possible reason for difference? It can be a case you might have recorded the ITC and it not got reflected till November 24. Obviously that ITC will get lapsed because time limit to claim the ITC got lost. It's over. So it can be a case of only in books ITC, not reflecting in GSTR-2B. Second scenario, it may be a case that ITC was reflecting in 2B, but you missed out to account in 23-24, which we say only in portal. There can be a case the transaction was appearing in 2B, you have also claimed in 3B, but there may be a case you missed out to account in books in the same year, or you might have accounted next year, or it can be a case by mistake you expense on. I'm just giving you a scenario which can arise. Sometime due to improper recording, that reversal in 3B, you are doing all the reversals. See, this table 12E, which is coming, it's avail minus reversal. Sometime in books, while taking detail, it's also not gross ITC, it is the net ITC you have taken. Means ITC which you have availed less ITC you are liable to reverse, and you have reversed the net ITC you have to do. Another reason for difference can, if any impact you have carried forward in 24-25. So if you haven't given the impact in 23-24 itself, you have given in 24-25, then that will be also a reason for difference. And you can use this table 13 to write down your reason, thereby making sure, see, we are standing now. We know department has 3 year and 5 year to do our audit verification. It's not possible to remember each and everything what we are doing now after 3 years also. So you can record down all the reason, and obviously the plain and simple way, the way we write our reason for our understanding, same way you should not put in GSTR-9C while uploading. You should be little careful while drafting your reason so that it unnecessarily does not attract the officer attention. So you can use this reason box to specify what were the circumstances, why the difference are arising, so that in future, if anything happen, you will be having it very handy to know how it to be dealt. Now there is one table 14. Now table 12 is a mandatory field. There is no option. Earlier 12B and C were optional. I am talking about 21-22. From 22-23, it is mandatory. So you have to report brought forward and carry forward. Now coming to table 14. Now if I say it is an optional field, immediately you will lose the interest. Okay, it's an optional, let not file. You have the option, you can put everything in other expenses and file it off. But my advice is do this breakup. Reason being, while doing this breakup, you will come to know certain bifurcation where you can check, well, still any ineligible ITC you missed out. Like if I have rent and insurance and I am saying any ITC under rent and insurance I have claimed, I have to make sure I don't claim any medical related insurance ITC, life insurance ITC. So those check can be done. Like over here, if you will see employee cost is there and ITC. Okay, now employee cost ITC can come. So those basic check you can do once again to make sure that whether this dividation done and ITC eligibility I declared is as per under GST law or not. And in this also, difference will similarly comes like table 12, and you can again record your reason. The way I explain the table 12 reason for difference, more or less same will be the reason for difference in table 14, because both work in same pattern, books versus 3. Over to you.
Coming to the RCM reporting. For RCM, whatever taxes we need to report in two parts of GSTR-9. The tax which we will be paying on reverse charge basis, we need to report it in table 4G of GSTR-9, and the ITC which we will be claiming, we need to bifurcate such ITC into two parts again. In unregistered will come in table 6C of GSTR-9, and registered will go in table 6G of GSTR-9. Now we need to check what our check should be. Like table 6C of GSTR-9 plus table 6D of GSTR-9 should be either less than or equal to table 4G of GSTR-9. That means the ITC which we are availing on reverse charge basis, that should always be either less than or equal to the taxes which we have paid on reverse charge basis. If that is not the case, we are inviting scrutiny at our end, and we need to be ready with proper documentation to fight the battle. Secondly, table 4 of GSTR 2B should be greater than equal to, should be less than equal to table 4G of GSTR 9. Means whatever the ITC which is payable under reverse charge basis is reflecting in my GSTR 2B. That much ITC I must have discharged the taxes during my monthly filings, and if not, then I need to discharge such taxes at the time of filing my annual return. Also, my table 4 of GSTR 2B should be less than equal to table 6G of GSTR 9. Table 6G of GSTR 9 is basically the ITC of from registered person on which tax has been paid on reverse charge basis. Now, let us consider a scenario where my RCM tax liability has been underpaid. So, how do I deal with this scenario? Suppose my RCM tax liability has been underpaid. Now, one question which may come in my mind is like that RCM ITC which has been underpaid, whether the same is reflecting in my GSTR 2B. If the same is reflecting in my GSTR 2B, then I can definitely show it in table 4G of GSTR 9, whereby I increase my tax liability, and when I compare such tax payable of as per table 9 of GSTR 9 with tax paid of GSTR 9, then there will be a difference. So such differences can be discharged through DRC 03. Now let us consider another scenario whereby such underpaid RCM is not reflecting in my GSTR 2B, but the expenses which are accounted in my audited books of accounts demand tax to be paid under reverse charge basis on such expenses. Many a times we find that the transportation expenses which we book in our books of accounts, many transporters don't file their GST returns, or even if they file, they don't file it properly. The RCM liability on such transportation expenses as recorded in our books of accounts and as reflecting in our GSTR 2B is always higher on the books of accounts side. So what we can do? We can very well, means this is a very, again, matter of very an idea of matter where an idea where a suggestion may differ from professional to professional, but what we think as a team would be like, if tax has not been discharged either in monthly returns or in the monthly returns of the subsequent period, then what it is better to be done is like, we need not report such taxes in either 9C or GSTR 9. Don't report in both GSTR 9 and GSTR 9C. Instead, what we can do, we can pay RCM liability on such expenses in the upcoming month's GSTR 3B return and claim the corresponding ITC. Now, why I am saying this? This is because recently, if you if you people would have gone through the circulars, like a circular number 211 came into effect, whereby it was decided that for RCM, for ITC from unregistered person, the time limit to claim such ITC under section 16 subsection 4 will be deemed from the date of such self invoice is generated. So RCM, for RCM we know we need to have self invoicing as per section 31 of CGST Act. So if I pay my RCM liability pertaining to a year's expenditure in the subsequent year and claim my ITC in the subsequent year, even after the specified date, it will not be beyond that. It will not be considered as time barred as per the circular, but the same is still litigative. However, we can take that risk if the amount is higher. If the quantum is very less, like if the quantum is less than 2000 to 3000 rupees, where my liability arises only 3000, then I can very well show it in my table 4G of GSTR-9 and pay the differential taxes thereon. Another option is there, if 9C is applicable, then I don't show it in GSTR-9. In GSTR-9, I report what I have reported in my monthly returns only, and I create an additional liability by disclosing these figures in table 9 of GSTR-9C. Thereby, my tax liability increases and I pay my taxes through DRC 03. So what I can do is up to me, is up means depending upon the scenario, depending upon the quantum, we need to take a decision in a wise manner so that it is in the best interest of all of us.
So over here, with respect to RCM reporting, now RCM liability which we are liable to pay required to be reported in table 4G. So over here, irrespective of the fact it is from a registered or unregistered person, if on any expenses you are liable to pay under RCM and you have paid through 3B, let me clear, it's not payable, it's paid. So for the example, suppose I was liable to pay on 5 lakh, but I have paid on 3 lakh. I am required to report over here what I have paid, not what I am liable to pay. I will discuss in short, means just will discuss the reporting, then I will discuss why I am saying this. Okay, so if I have paid in 3B, table 3.1D, where I am required to report my RCM liability, what I have discharged through 3B, I will report in table 4G, one area of RCM reporting. Second area of reporting, table 6, which I discussed, 6C and D, where we disclose about ITC claim under RCM based on registered and unregistered. This is only the two places where we are required to report RCM in GSTR-9. If you will notice, there is no much of reconciliation and all like we are doing for outward and ITC. It's very simple. It has given, you only determine how much you have paid, disclose over here. So accordingly, you have to do the reporting in GSTR-9. Here, you have to make sure the ITC which you are saying that you have claimed over here. Suppose I am reporting just, for example, I am saying I have claimed 1 lakh or let me put 18,000. So suppose my total ITC claim in table 6 is only 1880. This should be either lower to or equal to I have paid. It cannot be more than, it cannot be 30K, 35K. See, 9 is not for availment of ITC. All availment will happen through 3B only. So there cannot be a scenario where my ITC claim under RCM can exceed this. Apart from one situation where I have noticed people have the habit of paying in 1 month and claiming in another month. They pay in March, claim in April. But in RCM ITC, part is the month you pay, the same month you can claim. There is no bar in it. Even the government has also issued the clarification. But most of the time, my table 4G should be higher than my table 6C or D total. Either it should be higher or it should be equivalent, because there is nothing which says tax paid under RCM should be equal to ITC claim, because we also know there are certain supplies, though covered under RCM, ITC is restrictive. One of the example is renting of motor vehicle. Then based on other block credit also need to be checked. So this is where I have to report my paid. This is where I have to report my claim. Now the second part which I said, I have to report paid, not payable. There is a reason. Now if you will notice, as I said, I am eligible to claim the ITC the moment I paid the tax under RCM. So if I will report over here, my payable, instead of paid, my table 6C and D I can't increase. Because over there I have to show what I actually claimed through 3B. Now what I will do? I will claim in my 3B of what I have paid over here. Suppose 2 lakhs I paid in 9. While filing my GSTR 3B, I showed my ITC under RCM 2 lakh extra. Now that month 3B will not match with RCM tax paid and paid ITC claim, obviously, and you will get a notice. So to avoid this, and even instruction have been issued in GSTR-9, and they themselves said that you have to report only what you have paid. Even if of 23-24 any RCM payable you have discharged in 24-25 will be reported in GSTR-9 of 24-25, even though it's related to 23-24. One of the reason why I am saying you should not disclose is due to mismatch which will happen in 3B. Because obviously I am paying, I will like to claim. I will not lose that money. Second part is when is ITC eligible? Now, if I make a payment to DRC 03, there will be another sort of litigation which will happen to show that my ITC claim is eligible, it's a legal credit and I can claim. Instead of that, it's better to pay through GSTR 3B and claim through GSTR 3B. Now, the question which you can ask me is, we are standing on the December month. Time limit to claim the ITC is November. How I can claim? But that's the same pattern doesn't work for RCM ITC. Now, though they have given clarification and based on that clarification, it was for past litigation. But if we apply that principle in present also, what they have said for RCM part, now RCM also you have to divide into two parts. One is registered RCM, one is unregistered RCM. Now for registered RCM, you are not required to raise self-invoice. The time limit will run from the invoice date or time limit will run for payment date. Is a question mark. Though we say when you are paying, you should claim. But if we see the registered RCM will run based on time limit defined in 64. So I can't go beyond November, even I am paying now. But when it comes to unregistered, there is a little point of gap is there, litigation is there. Though 16.4 barred me, but Rule 36 also say me I can claim ITC only when I make the payment. So when my ITC right to claim is arising after payment, based on invoice, it should not be, but it's a different litigation. I'm not going into that, but I am just giving a point to think about it and how you should the reporting. Based on GSTR-9, you should report what you have paid through 3B. So as simple as it, that is what the instruction given. Now, when we come to unregistered RCM, over there you have to raise the self-invoice. And time limit for availment of ITC run from that self-invoice. That is what the circular has been issued. But that circular purpose was to end past litigation, but it's nothing mention of period in that circular. So if I use today date also, even on unregistered supply which is covered under RCM, I am paying today through 3B and will claim to 3B until and unless government comes or gives some other clarification. Based on that circular, I think we can claim, but obviously there is a litigation. But based on GSTR-9, you have to report what you have paid, not what is payable. And another area where 9 RCM need to be reported in 9C is your table 9. Over here, just rate-wise bifurcation. If RCM applicable, you have to write for it. If it is a GTA, 5%. If it's a legal service, 18%. So based on the rate applicable, you have to do your disclosure. For this expense analysis and all, we have already discussed, as today focus is on reporting. So I am not going into how you should verify the RCM part. So this is all with respect to 9.9C reporting. Only one part which is left is your table 70, which is HSN-wise reporting. Now somebody was asking in the query how to whether we have to report exempt, you have to, it not just taxable on which you are paying tax, but even export HSN code, even the supplies on which you are not paying tax, but you have formed part of your table 4 and 5 as a reporting need to be reported. So you have to make sure you report all the taxable supply, even export, even exempted supply. The only thing which will not be reported is non-GST supply, because non-GST doesn't have any HSN code. If it is an interest, HSN code is 997112. Others are taxable. This is export. All of this 84, 81, like over here we are getting. So we are cross verifying with the GST turnover we have drive. So this total should match with my table 5 and here, which is the total of table 4 taxable. No, it's not taxable where we are saying tax implication. Table 5 where we are saying non-tax implication. So this is here I got 84 crore. This is what the value. And in HSN code, I am giving the bifurcation to the extent of 84 because over here there is no non-GST. If non-GST would be there, then that will be the only sole reason for difference between HSN code, detail, furnished. And this is mandatory. Though table 15, which deals with refund and demand, and table 16, which deals with inward, is optional, but table 17 is mandatory, which need to be filled. If you are having turnover above 5 crore, 6 digit, if below 5 crore, 4 digit. And table 18 is HSN summary of inward supply. This is optional. So it's upon you whether you want to furnish or not. So this is all about GSTR-9 and 9C, which we have discussed now. So we will quickly move into the questions session. Whoever have the query, they can ask so that we can move to our technical session of today. You people, members can unmute and ask their query.
Maybe you can put your questions in the chat. Team will take it. Friends, there's been a detailed work that has gone. This session is recorded. You'll be able to watch it and get it. When you're actually filling the table, R9, some areas, you'll get a doubt. So that time you can have a recap. Presentation definitely would be shared. In the meantime, Tarun, can you come up with your piece? As we move into the next part, which is on the technical session, with regards to GSTR-9 and 9C, I want only 2 sentences to keep in mind, each one of you. When it comes to the liability for the financial year 23-24, liability means it's a time of supply in the financial year 23-24. Irrespective when you have paid, you would have paid excess in 22-23, in 23-24 through 3B, or in 24-25 through 3B, or nothing was paid, now you paid through DRC03. When you have to report liability in GSTR-9, the liability of GSTR-9 is for the financial year 23-24, irrespective when it has been paid. When it comes to ITC, ITC has no meaning when it is in your books of accounts. When it is there in the books of accounts, it is only input tax. It's not input tax credit. It becomes a credit when you fulfill 16 subsection 2, when it is there in GSTR 2B. Till that point, it cannot be treated as input tax credit. From 2B, if you have taken into 3B, then it becomes an input tax credit. You might have taken in the previous year or in the subsequent year. You cannot take the credit in advance. You can only take the credit in the same month or in the subsequent month. So the context for reporting input tax credit means the credit that has gone into electronic credit ledger. If you have filed in the financial year 23-24, that means that the input tax credit of financial year 23-24. It was there in 2B, but you have availed late. That means only to that extent it will be an input tax credit of 23-24 availed in 24-25. So these are the two fundamental things you should be aware of, wherein the liability is liability as per books which you have paid, credit as per 2B which you have availed. These are the two fundamental things I want you to keep it in mind. Feel free to put your questions in the smaller the group as a chat. What we will do now in the technical session, in the last week, we have seen how do we connect the data from Tally, extract it into Excel on a click of a button through Power Query. When we have changed the entries in the Tally, how automatically the numbers have changed, we have seen that. Today we are going to see two things. One, for the purpose of GSTR-9 you might have multiple tallies which you need to collate and consolidate. How multiple tallies can be collated, we will be seeing. We will also see if you have to extract input tax credit ledger related expenses for the purpose of table 14 of 9C, how the data can be extracted in one click, you will see. Tarun will show the demo, and after end of the demo, we will also share you the working files for your use. Tarun, over to you. Tarun, you are not audible.
Sorry, it's audible now.
Yeah.
Okay. Hi to everyone. And today's session is, this multiple tree extraction through Power Queries. And I have did documentation about this basics introduction to Power Query, working with Power Query, everything. So I'm not going through this all. It's done for you, for audience who attended for this session. So directly we are moving to TB, how to extract TBs. So these all slides, once you go through this, and now I will start from here. First of all, we have to do a tally settings. This ODBC connectivity port, everything. Then we have to open at multiple companies, whatever you want, like 3, 4, 2, everything. And we have to move to Excel. So I already opened Excel. In this, I have given steps here, how to follow, how to open this queries, advanced editor, again, how to refresh Power Queries, and then how to make a pivot, everything. So now we directly move to Excel. So here we have to click on get data. So when you click on here, we will get a multiple options in like this. So first one, okay, first one, get data. It is in queries and connection, and we have to go through from other source. In other source, we have last option called blank queries. Here we have to paste this M language query. It is here. It's look like this, and I'm going to paste this query. Query to Excel. Control A, Control C. Then the data. We have two options. One is from other source. Directly, we can go through this by click on Launch Power Query Editor. The new window will pop up. It's a Power Query Editor. Here we have an options like ribbons, options, everything, which is similar to Excel. These tools mainly used for transformation. In Home tab, we have to select new source. This new source, we have to go through blank query. and it will open a blank query. After this, we have to click on advanced editor option. So I clicked on advanced editor option. It's a plain blank page with these two functions. So I'm erasing this function and I'm copying Notepad Power Query, which I have copied from Notepad. This is how it looks like.
Again, this in the Excel that we share, you'll have the Power Query. You can just again copy paste.
Yes, there is a lot of queries. We will give that one. So here we have to change dates first. Okay, and now I will get normally these dates. So when we click on this, it start extracting whatever in the tally. It will load to Power Query by using these Power Queries. And I'm doing refresh once again. And I'll click on load, close load to import data. When we click on close load to, we'll get an import data option. In this table, pivot charts, only create connection. These options is like, if you want directly to pivot, you can click on pivot table report. If you want chart type, you can click on pivot chart. So now we need a table. So I'm click on table in the existing worksheet and okay. So this is TV. I will rename this one. Yes, TV. And I'll show you once. And we have two companies in tally. These two is here in company column. So these two. After this, we have to make a pivot on D3. So next, and new worksheet. So for time being, I'm taking ledgers into rows, and you can take credit, debit, or closing balance. So I will take a closing balance, two values. Here we can see ledger-wise closing balance. In this, there is a company column. I will add this one to columns. So it splitted, it gets separated company-wise and ledgers, amounts, everything. So like this, we can extract multiple tally company data into Excel through Power Queries, and we have another Power Query which is useful for making for doing groups related to these ledgers. So that we have another Power Query. It is after getting TB, we need to group in. Last session we have seen like through VLOOKUP how to do groupings for these ledgers. Now we will automate these groupings by using group Power Queries. And for this, again, same method we have to follow, which is before how we open get data option, this and all. So I will go through once again. Get data. Then from launch Power Query editor. So it will open again in Power Query editor window. this TV. So now we will take another new source. From here, other source. Again, we have to click on blank query. So I will rename this one to group. Group. And I'll click on advanced editor option. So here we have to paste, which is copied from Notepad. This is how that query looks like. Everything localhost 9000, which is given in Tally. By using this, everything it will extract. So now we have to click on done. So these are the groupings which is in Tally is extracted to Excel. Now again I will click on load, close load to, and here again we have to click on tables in new worksheet. So groups 29 rows is loaded. This is how groups looks like: name, parent, primary group, and nature. This nature column is when we give a relationship with the TB, it will segregate, it will separate it, which is related to balance sheet and which is related to P&L, and also it will show debit and credit, everything, gross, net profit, net profit, everything like this. Now we have to give a relationship between this TB and groups, and our relationship is like we have to give primary key to foreign key. So now I will do that one. Before we did in one pivot. Here we have one option called more tables. When we click on TB, we can see in this more tables. You have to click on more tables and it will pop up a new window. Do you want to create a new pivot table to use multiple tables in your analysis? So we have to click on S. Oh, it will create a new sheet and it will create a new table. It's called range. In this range, we have a TB, and now we are going to map, we are going to give a relationship with these groups and range. Here, in this range, we have one tab called pivot table analyze. And here is one option called relationships. And we have to click on this. Here a new window will pop up. It's like we have to give a relationship here. So there is two options. It will auto detect by using the tables, or otherwise we can give, we have to click on new and we have to give a relationship between TB and groups. So here I will select range. In range, parent. In range, I have to select parent column. And here in groups, we have to select name. So now when we click on this OK option, it will start a relationship with groups and TB. So now we created a new relationship between TB and groups. So I will click on close. It's already created. And now when you drag and drop these groups columns, nature, everything, nature column or anything to TB, it will show which is related to balance sheet, profit and loss. So now I will start dragging into these fields. So, okay, I drag it and I into rows. Now these all edges, which is from tally, belongs to balance sheet. And these belongs to profit and loss. And there is nothing related to profit and loss. So like this, we can create a relationships, we can analyze, we can do groups, everything with one click. If you need a sign, I can do that one also. So it will show which is related to credit, debit, everything. This is the easy way to analyze, to extract TB or multiple TBs from tally. So this is for extraction of multiple TBs. And it will create a balance sheet, profit and loss. And this is separate. So if I do any changes in tally, like related to ledgers, everything it will change. So I will show you that one also, how it will useful for a real-time purpose. So for suppose if you take some ledger name like Jalapati K, I will do alter and I will change these numbers, this closing balance in tally, and we will do refresh and we will come to Excel and we will check once that one. So here is minus 900. Now I will go to tally and I will change that one. And this ledger belongs to Autumn's Private Limited. So now I'm going to tally. Already selected. Now I'll click on DAL here. Here is here it is. So go to K. What is it? So why you so it's not showing.
Your voice is little low, Karan.
Sure, 1 minute, sir, 1 minute. No, this one.
Is the ledger is in other GBS Private Limited?
Yeah, 1 minute. It is not this, it is in Atoms Private Limited only. Shilpa, can you help? No. No, I got. Sir, it's a technical glitch, sir. We got this one. And here we can see Chalapati K. And I will do modification. Some other I will do. And it's totally 600. Now I'll do control.
Yeah, just press Alt F2 and change the period from A09. No, this is March 9, so you should be A08. Let's put it as A08.
Now we change in tally. So I will go to one Excel. And I'll go through this TV. I will do refresh on TV. And TV, like when you have queries and connection, there is another window which is related to Power Queries. So when you do changes in tally, you have to come here and click on this refresh symbol. So I clicked on that. Now I think Chalapati K it got we changed here. Again, we have to click on pivot table analyze and do refresh. So, earlier it is 900, and when we change, it change it to 500. Like this, we can do changes, alters everything, and do refresh, and we can get TVs from tally.
Yeah, we'll stop at this. So friends, last week we have seen single trial balance, but now you can see in the one go, if you have tally data, maybe imagine this way, you have a group, 4 GST numbers, 4 different tally, or you are doing a presentation to the management where there is entity A, entity B, you're preparing P&L financials for the thing. So you can also prepare P&L balance sheet at a group level in one go. That is the objective. We will be sharing this file for reference. Anything else in this, Tarun, that we need to show?
Tarun, are you sharing this M points also, right? You copy and paste M points, no? That for
M query. Yeah, so when this file we share the Excel, Tarun, can you just go to pivot table, analyze? Let me also just show you. Let me take it in. So this file, every time when we send you a feedback link, you will get after the feedback, you will get the option to download the presentation and this. Yeah. So let me just show in this data, you have the data which is there is a groups, and this is your TB that has been taken. On the right side, the connections that you are seeing, you can actually hover over it. It is showing. You can just click on edit. It will go to the entire query. So the query will be embedded inbuilt into it. Hope this answered your question, sir.
thanks a lot, sir. If you don't mind, can you see 1 second, sir? Where to go? Where to go edit, is it?
Yeah. So either there are multiple ways to go there. Let me just show you once again.
Please,
Let's
please.
close this. First, You can go to, on the top of this, you can see table design and query.
Okay,
You can just hit on this edit button.
fine.
Or you just hover over this. You are here, automatically that screen will come.
Okay,
Even here, you can view it in worksheet, click on edit, you will go there.
okay.
Yeah,
This query is mainly used for to extract trial balance in groups, correct? No?
anything. Trial balance is just a start which we have given. So you can get your cash book, bank book, ledger values. You can get any data. It's basically you're extracting the reports.
Okay. Okay. Okay, sir. Fine, sir. Yeah. Thank you. We'll try this option, sir. Thanks.
Absolutely, absolutely, yes.
Yeah.
Okay. All right. So any questions, anyone in the GSTR-9 9C or in the technical session?
Hi, sir. Good evening. Purna here.
Purna sir, namaskara. Yes, good evening.
Namaskara. Sir, there is one query related to GSTR-9. See, now 8A is actually 2B, it is auto-populated.
Correct.
So there is no question of claimed input related to last year, current year, it is claimed in next year.
Correct.
So now, as already discussed, so it is showing in 6H as a reclaim.
Correct.
If you see 2017-18 onwards, this column is showing as a, usually will show those who are not paid creditor within 180 days, they reverse the input tax
as per
credit.
rule 37.
Yeah, that usually we will show here.
Correct.
Since we are showing this reclaim amount to what we are temporarily reversed in last financial year 2023-24.
Which is claimed now.
Yeah, now it is the difference it will reflecting in 8D.
Correct.
To rectify that, we are showing minus figure as we already discussed with Ashika madam and Hitesh.
Yeah, in 8C.
Yeah. Now,
Correct.
what I am saying, see, instead of showing 6H, if I show in 6M,
right,
reclaim amount. So
right.
there is no difference in 8A and 8D.
8B. Right.
So instead of showing negative amount, again it will pop up in departmental system maybe. So
right.
can we show in 6M so that anyhow it is showing as a all other than any column it is showing. So we can
Correct.
use this column and we can show it 0 only in 8C so that there is no pop-up. It will arise in departmental system.
No problem.
Can we
So,
show?
yeah, so basically you always need to be aware how system works. Some of the tables, if you have a value, you will get a notice. Like how Purna was saying about 8D of 9. Likewise, 6M of 9, 5O of 9C. Wherein department wants to know what is this classification that has. As long as you can justify your value in 6M is matching with 4D1.
Yes, sir.
So they have, department has given electronic credit reversal and reclaim ledger, wherein wherever credits you have reversed, you are reclaiming to ensure that this is tracked. So if you are showing in 6M also, it is perfectly fine. Now, which is right, 6H or 6M? The answer is 6H. But if you put it in 6H, you will end up doing a negative 8C. Now, if you want to avoid negative 8C, you can show it in 6M. No harm. But make sure the value reported in 6M is matching with 4D1 of GSTR-3B. That is a care that you have to take care. Then you can always say the original credit is in 6B and reclaimed credit is in 6M. Works. That is also fine.
Okay. One more thing, sir. See, while doing 3B, I'm having eligible input tax credit and ineligible also.
Right.
So ineligible, I already reversed in 4B1 as
Correct.
a permanent reversal.
Correct.
After 2 months, I got one credit note related to ineligible input tax credit.
Correct.
What I did, so it is reducing my eligible input tax credit in 4A5.
Correct.
to avoid that, what I did, I added that ineligible input tax credit in 4A5.
Right.
Now that difference it will show in our 8A.
Okay. So wherever the credit notes related thing has come, it will not show any difference in 8A because your 2B is net of credit notes.
Yes, sir.
Let's take a scenario. I have 100 rupees credit, of which 20 rupees is an ineligible credit. I have availed the 100 rupees in 4A5, 20 I have shown in 4B1, net credit availed is 4C 80. For this 20, I have received another credit note. Now, when I want to report the credit note, I have not even availed the credit note. I will reverse this in my 4A5. So 4A5, instead of showing any value, I am ignoring the credit note.
Yes, sir.
Now, what's happening? The net credit that you have availed is 80, which is 7J is 80 of GSTR-9. So 100 you will be showing in your 4A5, which is equivalent to the credit that you have shown in, let's say, 6B also. 6A, 6B is 100. Now 7 that you have reversed. Why did you reverse? This is on account of Rule 42. So in your 7E, you will be showing that there is a reversal on account of Rule 42. 7C, you will be showing 20.
Yes, sir.
When it is coming to your table 8, your 8 is showing 8A, which is as per 2B is showing 80, but 8B is showing 100.
Yes, sir.
You have an excess claim of credit showing as minus 20 in 8D.
Yes, sir.
But the explanation to minus 20 in your 8D is already there in Rule 42 7C.
Okay.
So that is why again I am saying if you have either a positive value or negative value in 8D, you will get a notice for which you need to have an explanation.
Okay. Okay, sir. Thank you.
Yeah. Ashika, all questions in the chat were answered. Anything pending? Yeah, I can see replies given to everything. There's nothing pending. Okay, so I think we can end the session. So there's one, please clarify.
Sir, our question not replied, sir.
Which one, sir?
Sir, ITC reflecting in 2B but not file with 3B return. Are we eligible?
Yeah, so the time limit to avail was 30th November. So you're not avail. If you have availed before 30th November, that much value will be coming into table 13 of GSTR-9 and 8C of GSTR-9. Since you have not availed, your 8D will be showing a positive figure to the extent the credit that you have not availed, which you will have to report it in 8E. It's a lapse.
Lapse. Okay.
Yes. Yeah.
So one more thing.
Yes, sir.
Related to this November 30, their government is saying November 30 is the last date for claiming the input tax credit related to previous year.
Correct.
Now my vendor is filed GSTR-1 on 12th instead of 11th. So government is saying 30th is the last date. But if you file 12th, I can't claim the input tax credit because it will go to next month to be.
It's a bonus to the government, that's all.
So it is not actually 30th of November. It is actually 12th who are filed, then only we can claim.
Yeah, so assuming he has filed on 11th.
Okay.
So you will still get 30. So the 30 has to be read as credits visible in 2B by 11th.
Okay.
Or by 13th, whatever.
So quarterly or monthly due dates is the last date to claim the input tax credit. If
Correct.
it is up
correct.
here only, I can claim the input tax credit up to 30th.
Yes, and this credit in the next month, it will automatically be reported in 4D2 of GSTR 3B. So government says this credit you cannot claim. This is a loss credit.
Until unless they issue the notification after 4 years.
Now I don't think there would be any more amnesty or notifications for this.
Okay. Okay.
Okay.
Thank you.
Yeah.
Sir,
Good.
this IMS session and 3B auto lock session, when you will be taking, sir?
Sir, 3B auto lock most likely will happen in January. So in the January, we will be covering on special focus on IMS, because IMS is going to become the way forward. What is that you have to do? And IMS is also kind of a dynamic. Let's say like same Purna sir's example, the data which is in e-invoice is going to come to your IMS on a real time. You have accepted it, thinking that, okay, you have accepted the credit and you will be able to avail it. But that person has filed his R1 after 11th. So even though you have accepted in IMS, the credit will not flow to 2B. So you will have to be aware of these scenarios. How do we handle, and what is the reporting tracking mechanism that you need to do it? We will be discussing this in the month of January. We are hoping to have the session on 25th of January. The session is likely to happen. We will freeze the dates and revert to you soon.
Thank you, sir. Got it.
Yeah. Great. So with this, we conclude today's session. A special thanks to Ashika, Hitesh, Jagadeesh, who have taken pain in detailing all the aspects of GSTR-9 9C. Stephen for coordinating and hosting the session. Tarun for showing all the technical aspects. And special thanks to all the participants for staying together, getting all your doubts being clarified. Thank you all. We will send you a feedback link. Let us know how the session was and what are the new sessions that you are liking to hear from us. And once you submit the feedback form, you will get a link to download all the materials. Thank you and good day.